Hello, everyone. Welcome back to our weekly dive into the world of market analysis. Today, we are going to be focusing our lens on the XAUUSD chart, gearing up for what promises to be another dynamic trading week. In our last session, we rode the wave of the US dollar strength, riding it down into that $2,325 zone with an impressive 820 pips move. And of course, you will remember during the course of the journey, we were privileged to seize multiple entries along the way to maximize profits. And for those of you who are part of last week trading session, you remember this is what the setup was looking like, where we did identify a supply zone within the 2431 area and of course the 2400, which later during the course of the midweek became a platform for selling opportunities. And I was very excited that we were able to capitalize on that opportunity. For a detailed breakdown of each entry point, you might want to check out the link in the description box below for reference purposes. Well, another week is right in the corner, and in fact, we are facing a landscape peppered with geopolitical tension in hotspots like China, Gaza, and of course in Ukraine. This tension could very well drive investors towards safe haven assets such as gold, making it a particularly fascinating market to watch. As always, we will be leveraging our basic tools from the economic calendar to trend lines, key levels, and of course, chart patterns to predict potential direction of price action in the week ahead. Now, the question on everyone's mind is, will the recent surge in positive US economic data bolster the Fed's cautious stance, potentially dampening the price of gold further, or will the global geopolitical tension act as a catalyst propelling gold prices to new heights? Which side is going to emerge victorious this week? Will it be the buyers or the sellers? Stay tuned in as I have got some intriguing trading ideas brewing that you wouldn't want to miss out on. But before we jump into the details, a quick reminder while we are here to learn and explore, remember that this video is for educational purposes only. Forex trading is not without its own risk, so tread carefully and seek advice from seasoned professionals before making any investment decisions. So, with that being said, here we will be diving right into the business, and of course, our the first thing we normally do is to look at things from an holistic standpoint. So, today our first point of contact will be on the daily time frame. And right here on the daily time frame, what I did was to take into consideration the character of price action since the month of October of last year, and that's an historical data of about 8 to 9 months thereabout. And of course, it is quite clear that this market is very bullish. And to further emphasize the strength of the buyers in this market, I have a couple of ascending trend line, which you will see here after connecting the series of higher lows. And of course, it has played a significant role in helping us to maintain that bullish bias in the last 8 to 9 months. Now, in addition to this trend line is where our key level is going to be for this week, which is the $2,350 area. And of course, for those of you who have been with me for a while now, you know how we use our key levels, as it's usually served as a yardstick to guide our trading decisions for every week. So what this simply means is that if price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying, and we will not be considering selling unless price action stays below and of course find selling pressure below the key level for us to feel comfortable joining a bearish move. Now, in addition to that key level, here is the supply zone. Of course, you will see that ever since price action had tested all these all-time high levels between the 2,450 and the 2,415 area, we have seen how it has become difficult for buyers to continue that momentum. And this is usually peculiar with such market structures, especially when we are within uncharted territory. The fear of missing out usually comes in, and majority who had capitalized on this bullish trend may at some point around this area want to start taking some profit off the chart in the fear that price may crash from that particular area. And this usually reflect on the chart as consolidation phases, retracement moves, or even choppy market conditions. And if you look at it here, ever since price action tested that high, you can see how the market has been a little bit choppy. And last week we saw this massive engulfing bearish candle following the Fed's hawkish remarks during the FOMC Minutes publication, resulting in price action dropping and breaking down that first ascendant trend line and that key level at the 2,350 area. And from what we have on this chart right now, you will agree with me that we are at a crucial juncture where, depending on how the market is going to be reacting to the 2,350, and of course, that ascending trend line will determine where we will be going. Are we going to be buying from this area or selling from this particular level? However, I have a simple trading setup on the 4 hours time frame which will help us to navigate this area effectively. However, before we go into the 4 hours time frame, it is important that we keep tabs with the fundamental factors that will be influencing the sentiment in the market in the coming week. And of course, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that will make us strategically position ourselves for the next move. Now, based on the asset we are looking at, which is the gold, we will be focusing on economic features from the United States economic docket. Now, the first high impactful event we will be looking forward to is coming in on Thursday, that's May 30th, and we are looking at the gross domestic product annualized for quarter one. Well, this is a very important economic indicator that represents the annualized percentage change in the United States economic performance. And of course, this represents the total value of all goods and services produced within the US border. Then, fast forward to Friday, May 31st, we will be looking forward to the core PCE, which is usually known as the core personal consumption expenditure price index for the month of March. And this data here measures the average change over time in the prices paid by consumers for goods and services. And this data usually influences the market sentiment as it provides insight into the inflationary pressure in the United States. So, this is one other event we want to be looking forward to, as it will be giving us an insight into the trajectory of interest rate decisions in the United States. So, these are the high impactful event we will be looking forward to this week. And of course, as technical traders, we do understand that the anticipation of this event has a way of influencing the sentiment in the market, which obviously would reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I do have a simple trading setup to guide our trading decisions for the upcoming week. Now, right here on the 4 hours time frame, as you will see, the key level at the 2,350 remains very much intact. And remember what I said, when price trades below the key level, we want to be looking out for patterns and structures that support the idea of selling. And if price climbs above the key level, we want to be looking out for patterns and structures that support the idea of buying. Now, considering what has happened, look at the trend line right here. So we have price trading above the trend line, and not until last week, Thursday, we saw the breakdown of this particular structure. And of course, when price breaks down an ascending trend line, it's a signal that sellers may likely be on the verge of taking over the market. Now, the question is, will sellers maintain the bearish bias, or will this area become a platform for bullish momentum? As you will see, since the beginning of this month, you can see how that area between the 2,350 had been a strong buying niche in this market, and right now price action is back into that zone. So you can see how crucial this area is, where we will be looking out for how the market will react to this area to decide what our next line of action will be. So, zooming into last week's trading session and taking into consideration this impulsive bearish leg that dropped into the 2,325 area, and of course, you can see price came back into the 2,350 with new selling pressure coming in again. Now, it will this whole structure here evolve into a bearish rectangle pattern, which is a downtrend continuation structure, where the breakdown retest of the 2,325 will be all we need to continue the downtrend continuation. That is one scenario I'm going to be looking out for. Or will we going to be seeing price action transition into a reversal pattern? Let's say a double bottom structure, where the breakout of the neckline, which beautifully may share a confluence with our key level, will be a confirmation to join an uptrend move. So you can see we are at a crucial juncture. So we shall be monitoring how market participant will be reacting to this confluence here between the 2,350 and the 2,325 area during the early hours of the week to have an insight into where price will be going. But trust me, I will be with you in the comment section of this video to give us an update after monitoring the character of price action around this area during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decision for this week, I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.